Alright, for this video I want to do a walkthrough of the IRS Form 8936 for the clean vehicle tax credit, and this is going to be for the 2023 tax year. Now for this vehicle we're going to be looking at a taxpayer that bought a Cadillac LYRIC. So a 2023 Cadillac LYRIC that was purchased in December 2023. So we'll talk about how much of a credit we can claim for this vehicle. And in this example, our taxpayer actually has income that exceeds the threshold for the year, which makes him ineligible, but he can elect to use prior year income in order to get that credit. So we've got the full return here, which we'll go through. I do have one slide covering some background on this credit and more details on the fact pattern. And then we've got two websites up here. We've got the IRS's information on the new clean vehicle credit, who qualifies, what are the amounts, how do we calculate the credit amounts depending on when the vehicle was bought and placed into service. There are different standards for vehicles that were bought and put into service between January and April 17th, 2023, and then what happens after that. All right. And then we've got the IRS, sorry, not the IRS, the fueleconomy.gov website, which is a great resource where you can look up the vehicle you bought or thinking about buying, and based on the make, model, and year, how much of the available credit is going to be available for you to be able to claim, right? So do you get $3,750 or do you get a full $7,500 credit, depending on the make, model, and year and when it was placed into service. So if we go back to the one slide here, we'll talk a little bit about the credit and then get into the fact pattern. So the new EV credits available for a handful of vehicles. Now the credit amount, generally we're looking at a $7,500 credit amount. And the $7,500 credit is two components. So the first $3,750 you get if the vehicle meets the critical minerals requirement. And then the second $3,750 is if it meets the battery components requirement. And so you can see this outlined if you go to the fueleconomy.gov website. You notice here, for example, the Audi Q5, this Quattro, is only getting $3,750 because it only meets one of the tests, versus the LYRIC and some of these others get a full $7,500 credit. So really important to pay attention to what kind of vehicle you have, because not every vehicle is going to get that $7,500. Now, some other key points to remember here: when you do claim the credit, to the extent you're able to claim the credit and what amount, you have to reduce your basis in the property, right? So if you bought a vehicle for $50,000 and you end up getting a full $7,500 credit, you have to reduce your basis of $50,000 by $7,500, and that's important because if you later sell it at a different date, you've got to account for that reduced basis cost, right? Now, the election here, this is really important, and this is what we're going to see in our example. Now, if your income in 2023 is above the relevant threshold, generally that would mean you can't claim the tax credit, right? Because your income is too high. However, there is this election, which is on the 8936, where you can use your prior year income if it's lower. And that's what we're going to see in our fact pattern here. Is Adam, he's a single filing taxpayer for 2023, and in December he purchased a new 2023 Cadillac LYRIC SUV, which is available or eligible for that clean vehicle credit. Now the credit, as we saw on the fueleconomy.gov website, is the full $7,500, so it meets that critical minerals test and the battery components test, so that's good. And in 2023, Adam's income is $160,000. That's his AGI, which exceeds the $150K AGI limitation for single filing taxpayers. However, Adam's income from last year was $142,500. So he can use that to qualify for this credit. So if we have a look at the 1040 first, just so we can get some income numbers before we jump to the Form 8936, but we can see we've got Adam taxpayer here. He's a single filing taxpayer, right? And that's important for the AGI thresholds. And on his income here, we can see that he's just got his wages. So he doesn't have any investment income, no other deductions. He's claiming the standard deduction. So his AGI is $160,000, comprised solely of wages for 2023. His taxable income is $146,000. $150, and so his total tax on those earnings is $28,476. So if we have a look at the 8936, you want to complete part 1 first to see whether or not you're even eligible for this credit based on your income. So in part 1, line 1A, we enter the amount from line 11, that's our AGI, of $160,000, right? That's for 2023. Now, we don't have any adjustments down here. We're not a resident of Puerto Rico. He's not claiming the foreign earned income exclusion on the 2555. So $160K is our AGI for 2023. Now, if we didn't have this option available, his income would exceed the threshold and he could not claim the credit, right? Because the credit limit is under 150,000 if you're single, 300,000 if married filing joint or qualifying survivor spouse, or 225K if you're head of household. So fortunately for this year, we have this 2022 income option. So line 3A, enter the amount from line 11, so that's our AGI, from your 2022 Form 1040. So he goes back to his 1040, he looks at last year and he sees my AGI was 142,500. And so on line 5 here, we get to enter the smaller of line 2 or line 4, which is $142,000, $142,500. So that's good. So he's eligible for this year, even though his income from the current period is high. So we go on to parts 2 and 3. So in part 2, there is no credit computation for business or investment use. We're just going to have the personal use piece. So what we do next is we look at Schedule A of the 8936, and then we can go back to parts 2 and 3. So you complete a separate Schedule A for each vehicle that you're claiming the credit. So if you're married filing joint and you bought 2 different vehicles, you might have 2 different credits, right? So you would have a separate Schedule A for each. So we have the year, make, and model of the vehicle. Line 2, we enter the VIN number. And then on line 3, we enter the date that the vehicle was placed into service. So think of it as the date that you drove it off the lot and started using it. Now, question 4, was the vehicle used primarily outside of the United States? No, right? So we're in the United States. He lives in Florida. He uses it in Florida. So he's going to be able to claim the credit. Now, line 5 asks, does the VIN entered on line 2 belong to a new, clean vehicle placed into service during the year? And the answer is yes, right? This is a new vehicle placed into service during 2023. So we can answer yes, go on to part 2. So part 2 is where we calculate the amount of business use credit, if any. And then part 3, the difference is the personal component. So the tentative amount of credit we have here on line 9 is $7,500, right? So we've got $7,500, but the business or investment use percentage is 0. So Adam is not self-employed, right? He's not a partner in a partnership or an S corp. So there's no business use component being attributed to this vehicle. He's driving it purely for personal reasons. So for that reason, the business use percentage is 0. And line 11, the credit amount attributed to business or investment use is also going to be $0. So once you have the $0 figure, you can go on to line 12. We subtract line 11, 0 from line 9 is $7,500. So we've got a $7,500 personal use credit. So if we go back to parts 2 and 3, part 2, the credit for business or investment use is just 0. Part 3, the credit for personal use is the remaining $7,500. All right. Now on line 10, the exercise here in part 3 is to figure out whether we have enough tax to be able to use all of the credit, right? Because this is a non-refundable credit. So it means you can reduce your tax dollar for dollar down to 0, and then any excess is just loss, right? At least on the personal use side. Business use portions of credits have different rules, right? Those can be carried over to a Form 3800 and carried forward and used in a subsequent year. But for personal use credits, you have to have enough tax to absorb all the credit or else it's lost. So on line 10, we have the amount from Form 1040, line 18. That's our total tax. So if I go back to page 2 here, line 18, total taxes owed for the year based on that income is $28,476. So we've got $28,476. Line 11 is blank. We don't have any other personal credits that are being claimed. So line 12 is just the same number from line 10, $28,476. Now line 13, personal use part of the credit, they're asking enter the smaller of line 9 or line 12. Smaller of those two is the $7,500 figure. All right, so $7,500 is the amount of EV credit that we're going to be able to leverage. So we enter that on line 13 here and then carry it over to Schedule 3, line 6F. So if I go to Schedule 3, this is where we report additional credits and payments. Non-refundable credits are in Part 1. So if we go down to Part 1, line 6F, we see the clean vehicle credit here, attach an 8936, and we report the $7,500 figure. The total amount of credits, non-refundable credits on Schedule 3 is entered here on line 8. We don't have any of these other credits for Adam's return, so we've got just the same $7,500 figure. And then that is reported on page 2 of the 1040 on line 20. So line 20, we have the amount from Schedule 3, line 8, $7,500. So we can see here that the total tax that Adam initially owed, based on his taxable income, $28,476, he gets a credit, a reduction to that tax for the full $7,500. So now the net amount of tax owed is $20,976. So in this case, based on his income, being able to use the prior year income amount, he gets a full $7,500 credit for that Cadillac purchase. And then obviously he gets credit for the payments, the W-2 withholding, and so that is his final refund amount there. Now, obviously the amount of your refund is going to depend on withholding and other payments and income, but what's important is to focus on these items up here. Lines 18 through 24, we can see he's got a full $7,500 credit. All right, so that covers it for this tutorial. Hope that was helpful. As always, appreciate you watching, and I look forward to seeing you again on the next one.